All right, so today let's dive into Bitcoin mining and really kind of where this future may play out in terms of both the US and globally. My name is Paul Barron. Welcome back to TechPath. Today we're going to jump into this with Mr. Fred Thiel, who is the CEO of a company called Marathon. You guys recognize this, one of the top mining companies in the US and abroad. Fred, thanks for stopping in today.
Great, Paul. Great to be here.
Fred, let's learn a little bit about Marathon for some of our. I can't imagine many of our viewers don't know who Marathon and many of these other Bitcoin miners are, but maybe for someone who's just jumped in on our channel, tell us a little bit about Marathon and what you guys are doing there.
Sure. So Marathon Digital Holdings is one of the largest North American Bitcoin mining companies. What does Bitcoin mining mean? Well, we mine Bitcoin. We have tens of thousands of miner rigs that are constantly calculating math problems, which essentially allow us to assemble blocks that make up the blockchain and record those, validate them, if you would. And then for that, we get paid by the blockchain in Bitcoin. And that's how Bitcoin are added to the blockchain.
Perfect. Fred, where are your operations? Are they mostly here in North America? Are you guys expanding out beyond the US?
So today, all our operations are in the U.S. We have facilities in Nebraska, some South Dakota, Montana. We're expanding in places like Texas and other states. The U.S. is a really unique market in that regard, in that good rule of law, great regulatory framework, and very good electrical costs. And it's very easy in the U.S. for companies to deploy renewable energy, which is our target sort of energy source because of our focus on ESG.
Yeah.
Internationally, it's an area we're looking at, but again, what's going to be key for us is partnerships in places where there's good rule of law, where we believe we can get long-term agreements locked in and really guarantee our cost of electricity and make sure that that electrical source is renewable.
Yeah.
Wind, solar, hydro, geothermal, et cetera.
Yeah. So we've had several different mining companies here on the show. And I think a lot of our users and viewers that come to our show constantly, they're always kind of curious, which mining company, how can you differentiate them? What's the differences between, a Marathon, a Riot, a Hut 8? Explain to me really where Marathon's kind of core, value proposition is in the mining community.
Sure. That's a great question. To your point, Bitcoin mining is Bitcoin mining, most people think, but there is a difference in how you go about doing it. And this has to do with capital allocation. So if you think about from a manufacturing perspective, you can own all your factories and design all your products, or
Mhm.
you can outsource part of that manufacturing, if you would. What we did is we did a really deep analysis on the return on assets that we get by the capital that we deploy. And we have two places where we would traditionally, as a miner, deploy capital. One is in the hosting infrastructure, so think of it as the data centers, and the other is in the miner rigs, the hardware, if you would, that we use for doing our job. And when you look at the investment that most mining companies make in the hosting facility, it has a fairly low ROI, especially if you can acquire access to that same quality of hosting through a third-party agreement that essentially gives you the same economics as if you were investing the capital, depreciating the asset, and then operating the asset. And when we look at the hundreds of millions of dollars of capital that we deploy on behalf of our shareholders, it was really evident that we make much more money by investing an additional dollar in miners than we do an additional dollar in infrastructure. And so
Right.
we have moved to a model of what we call asset light, where we only invest capital expenditure into Bitcoin miners. We don't invest it into the infrastructure. And
Mhm.
so our model going forward, because we have operated both models before, our model going forward is asset light. And so we only invest in the miners, which gives us a much better ROI. And I think if you
Yeah.
were to look at a lot of the industry analyst estimates, you'd see how that plays out from a financial perspective for our
Yeah,
shareholders.
for sure. So obviously here in the United States, we've been kind of the recipient of a lot of the mining culture that's moved in from whether they or just in general mining opportunities with China essentially kind of being, short shafted in the sense that we've seen that mining, that hash rate really move here onto US soil. When you look at the country, the United States, and you look at potential outlets, you guys have mentioned several states that you're in, including places like Texas. I just talked to someone today. They're actually trying to make Bitcoin a potential legal currency in the state of Texas. So I see a lot of activity in Texas. What are your thoughts on states that would be kind of the target zones? Like we're here in Miami. We have a lot of Bitcoin, innovation happening here as well as capital starting to move. What about the mining centers? Where do you think those are going to evolve to?
So, the mining centers depend on access to inexpensive power, lots of it, and ideally, we're looking for power from renewable sources.
Hmm.
Why, outside of the ESG benefits, is renewable energy important? Well, for one thing, there is an excess of capacity in the U.S. electrical generation market
Right.
today, about 10%. We generate about 10% more energy than we need, and that energy has to go somewhere. And as Bitcoin miners, we're the perfect baseload customer for that. But um, if you think about different parts of the East Coast, for example, like where you guys are in Miami,
Hmm. Yep.
what is the power mix there? It's the renewable is fairly low. It's generally much higher fossil fuel components in that part of the country. And so instead, we look at the states where there's ample open land to do solar sites. Or wind sites. As you know, those sites take lots of acres of land,
Right.
especially wind takes a lot. And you need to have the right climatology, meaning the right temperature, right amount of sun, the right amount of wind to generate the electricity. And often those locations are not where power customers are. And so the
Mm.
incentive for the power company to build out these facilities is that they have a baseload customer like a Bitcoin miner who can help them get financing to build out their field, whether it's wind, solar, whatever, and then eventually connect transmission lines to it to connect to consumers. Longer term in the United States, our expectation is you'll see upwards of 80+% of the power generated coming from renewable sources
Yeah.
over the next 20 plus years. That takes a huge amount of investment because today it's less than 50% of the energy
Right.
generated in the US. And so we need to really make those big investments. And as Bitcoin miners, we're all focused on partnering with power companies that are doing that. Another difference in our model compared to others is we very much want to partner directly with the power company to enable them to be in the Bitcoin mining business as well, because we believe for them to be able to continue to invest in their power infrastructure, they need to improve the profitability of it. And by doing some Bitcoin mining on their own, we think that they have the biggest incentive. They generate power. Power is our single biggest input cost. If we can partner with the power company on mining, then potentially we could have a very, very large amount of power to access that we could use for mining, and a partner with whom we can partner long term to guarantee our ability to grow. Where our competitors primarily have, large facilities. Riot has Windstone in Texas, which is a large facility. They're spending, arguably close to $1 billion between the purchase of the facility and the capex they're putting in there before they really start investing in miners even there. And they are totally dependent on the ERCOT grid there. Whereas our
Yeah.
model is go behind the meter at the source of power, act as a load balancer, and as a key, incentive for the power companies to deploy more renewable energy generation.
Yeah, I think that's been the argument with ESG is that in reality, mining could be that, relief valve, so to speak, especially with the hash rate in which Bitcoin is being mined at today, and the opportunities there to accelerate it too, because now you'd have demand for renewables that could start to set up either funding programs, government grants, all the different things that could really
Yep.
kind of move into that cycle to help support the mining initiatives around the U.S., especially as we kind of dominate the mining market now, which is going to be interesting. I definitely want to ask a question about that. But before we jump into that, explain the hash rate cycle that we're in currently, because many will look at, well, when is the last Bitcoin going to be mined? I know it's the last 1%, but you guys, of course, are kind of on a timeline here, even though the timeline is way out there in the distant future. Explain the hash rate and how you guys are going to go about it strategically, because I think strategy is going to be the key here for companies like you and others, especially over the next 2 decades.
That's a great question. The Bitcoin mining business is a game of four-dimensional chess because you have the price of Bitcoin, which you don't control. You
Hmm.
have the global hash rate, which you don't control. you can only control the amount of miners you purchase, the price you pay for them, and the price you pay for electricity and hosting. And so it's all about, when am I going to add capacity, and when is the most profitable time to mine?
Right.
Historically, in the Bitcoin cycles, there's a 4-year cycle between halvings, which is when the reward rate is dropped by 50%. So today we're currently, there are 900 Bitcoin rewarded per day. In early 2024, that number is going to drop to 450, in 2028 to 225, and so on until about 2140, when the last Bitcoin is mined. Um, Historically, when more Bitcoin was awarded, miners were constantly selling their Bitcoin. So you had this new supply of Bitcoin coming into the market.
Hmm.
Today, miners aren't selling, and the amount of new Bitcoin mined per day is fairly small compared to the amount of Bitcoin that's actually transacting on a daily basis. There are most probably somewhere between 4 and 6 million liquid Bitcoin that are being spent and transacted on a regular basis daily.
Right.
And so, the 900 Bitcoin made per day that the miners are being awarded, though not selling, wouldn't have a huge impact on price. So our expectation is that we're going to continue to see, nice increases in price. But these halvings drive a kind of cycle where, um, initially, historically, the price of Bitcoin goes up at the beginning of a halving cycle. Mining becomes very profitable. Miners start investing in miners. They start investing in power. It takes time to deploy that. So there's this kind of lag between when everybody's in the euphoria of it's super profitable to mine and when the reality of all this new mining capacity comes online. And if you're familiar with how Bitcoin mining works, it's a zero sum game. There are only
Yeah.
900 Bitcoin awarded per day. And so no matter how many people are mining, you're only going to get your pro rata share of that 900 based on how much hash rate you have compared to the global hash rate. And so as you go through this massive ramp up in hash rate, what ends up happening is the amount of Bitcoin earned per day per miner, unless you're growing pro rata with that growth in hash rate, you will receive fewer Bitcoin. And
Yeah.
so what ends up happening is the business starts becoming less profitable for certain miners. And the miners that come in at the tail end of this profitable cycle typically are paying premium rates for power because they just want to get into the business. They're
Hmm.
paying premium rates for miners. And they're the first people who go upside down financially if there's a major price correction in Bitcoin. Now,
Right.
caveat. Historically, this cycle has repeated itself where you have the first 2 years post a halving are very profitable, and then you get more crowded relative to the global hash rate, and then profitability drops, and then there's a decline in the price of Bitcoin a year before the halving, and there's kind of a washout in the business. And if you look at
Right.
how the strategy we deployed, we made a big bet in the middle to end of 2020 that the we were going to see a big ramp up in the price of Bitcoin. And so we were very early in placing a huge order with Bitmain for 70,000 machines, single biggest
Hmm.
order they'd ever received at that point, I think. And we placed a big bet. So we're getting delivery of machines while everybody else is still waiting for machines. So it's about that timing of getting in the market early. The
Right.
question is, do you keep buying machines into 2023 and 2024, or what are you going to do? Because either you're going to lose your pro rata percentage, or you're going to have to keep up. But then, are those investments going to pay off? So I think the cycle is different this time. I don't think
Yeah.
it's repeating itself exactly. I think there's a lot more capital. The price of Bitcoin is much higher. Profitability for a miner of our scale is, arguably in the 85% range. So, it's very profitable to mine right now. Um, but it's very capital intensive. So I
Sure.
think the jury's going to be out on this cycle, but it is this chess game that you also have to think about. Is there going to be a technology upgrade in miners? The past 10 years have seen a multifold improvement in the efficiency of miners from a power perspective.
Mm.
And because energy is our single biggest input cost, if next year a machine comes out that uses half the energy per terahash as current state of the art machines, then whoever buys those machines first has the benefit of that lower cost rate. So it's this, decision game. Is there going to be a new machine next year, or do I place a big order for existing machines?
Mm.
What's the price of power going to be like? What's the price of What's availability going to be like? What's the price of Bitcoin going to do? How many other people are coming into this space? And the one thing I will say is the global hash rate is exploding right now. It
Yeah,
is
yeah.
roaring.
Yeah. Okay, so there's a couple of strategies that we've analyzed here on the show before, especially within the mining community. One strategy that I'm kind of interested in the sense of global expansion, is the potential of almost doing a WeWork style of miner thing, to where you essentially lease out miners and/or facility to companies who are coming in and helping supplant some of that infrastructure cost, obviously offsetting the energy costs, things of that nature. If you could scale in that kind of format to where you'd essentially bring companies of all types into your fold, to where you essentially are just leasing them a little space here that's got 50 or 100 miners attached to it, do you see that as a potential to explode the market? Because the threshold to entry now for really becoming a real world-class Bitcoin miner is big.
Oh yeah.
So lots of companies want to get into it, but yet don't want to make that kind of initial investment. Do you think there's an opportunity for that kind of model going forward?
No, I think this industry is moving towards some institutionalization, if you
Yeah,
would. So,
centralization. Yep.
I mentioned earlier the power companies. So there isn't a power company that I'm speaking to today who isn't making a significant bit of research into becoming a Bitcoin miner themselves.
Hmm.
So, for them, the capex is they have to build some infrastructure and buy some miners, or they partner with somebody like ourselves.
Right.
Um, the retail miner, if you would, the person who would, go to say a Compass Mining and yeah, I'll buy an S19 that's $10,000 and I'll host it with you and you'll operate it for me. In 85% margin for somebody like us, that means that person maybe has 40 or 50% margin at the end of
Hmm.
the day. And, if the uh, cost of mining goes up by that, the amount of energy required, they can very quickly get upside down. So let's talk
Right.
about global hash rate for a second, because this is key. So prior to China shutting down, global hash rate was approaching about 170 exahash. So, which is, think of it as 170 million terahash of hash capacity. Average miner is about 100 terahash of mining capacity,
Right.
mining rig. So 170. China shuts down, arguably 50% of the global hash rate disappears. So now we're down in the high 80s. You have about 10 to 15 exahash comes back pretty quickly with Chinese miners moving to Kazakhstan, places like that. And then you have all the North American miners expanding. We're currently at around approaching 180 exahash. So we're right back on track where we were before. We'll likely end this year at close to 200 exahash, possibly.
Wow.
Um, as all these miners that were in China that are now coming to the US, and as the power companies come online, and as more miners like ourselves, I mean, we're expanding from 3 exahash to 13 exahash over the next 9 months. Our colleagues in the industry are doing similarly. So you have most probably around 50 exahash of US capacity increases. So we end next year somewhere between 320 and 400 exahash. So think about if we were just a few months ago at 150, and at the end of next year, we're going to be at double that, if not more. That means that the mining rewards received by miners will be half as much
Yeah.
unless they grow their miner rig capacity. And so if you're that retail miner and you've got 40, 50% margin because the hosting company is charging you a decent price and you paid for your machine, now all of a sudden your profitability drops by 50%.
Hmm.
And then in 2023, it drops yet again as the global hash rate continues. And then in 2024, it drops by 50% again because of a halving. So for somebody like us, where our cost is arguably around $6,000 to produce a Bitcoin, if you look at power and hosting, for a retail guy to produce a Bitcoin, it's going to be closer to $20,000, $30,000 to
Yeah.
now go through that cycle. And, their cost is effectively their break evens over $100,000 a Bitcoin
Right,
at the
and
time of the
obviously,
halving.
yeah, and obviously that would have to play into where Bitcoin's price is at that time. Many people are looking to 2035, or yeah, 2030 as a potential of seeing a $500,000 Bitcoin could that, eventually roll into it? I think and I would agree with you. I think the scenario is we're either going to see a lot of centralization, mergers, companies like what you're talking about in terms of the actual power grids themselves moving quickly into it. Do you think we'll see the government move into something like this at any point, or governments around the world?
I think you've rephrased the question in a better way. I don't think the
Yeah.
U.S. government wants to get into Bitcoin mining, just like
Yeah.
they don't want to be a power generator. Um, so But certain countries certainly could be viewed as getting into it. You could argue that any government that has access to low cost electricity,
Hmm.
regardless of how they generate it, could potentially be in it. I think there are certain governments in certain countries who view Bitcoin mining as a way to generate revenues, and they'll take power from their people potentially to make it happen. So
Mm.
I don't think many Western governments will want to do it, though. I think this
Sure.
is really an industry where um, it's about technical expertise in operating large data centers. It's about buying and partnering with power companies. It's a long-term capex game with a lot of risks, technology risks, and things like that are associated to it. And I think that we're going to continue to see a very positive regulatory framework develop in this country. I think the regulators are taking a very um, evolutionary approach to it. They're not going to do a revolutionary approach. I think they're to try as much as possible to create a level playing field,
Mm.
such that the new participants in the DeFi space, for example, who act like banks should be regulated like banks. If
Right.
you're a commodities exchange or a broker dealer in crypto, you should be regulated like a broker dealer or commodities exchange in the traditional market. So that's why I think you're not seeing a huge amount of new regulation. You're basically seeing the regulators saying, hey, just adapt yourself to our existing regulation,
Hmm.
um, which is most probably longer term. I think with hindsight, people are going to say that was the right model to go. Where I think we're going to
Yeah.
start seeing some interest from the government is going to be in, does Bitcoin mining become a strategic asset for this
Yeah.
country?
Exactly. Yeah.
Are by securing the blockchain, is the U.S. doing its part in securing the sanctity, if you would, of Bitcoin and blockchain as a safe and reliable, um, you know, asset and store of value.
Well, and definitely could roll into that. It's interesting the move that obviously China made with the digital yuan and ejecting their miners out of the country. Their strategy is considerably different. But other major nation states could definitely go in this direction. Do you feel that we could see movement, whether it's from the Middle East, maybe even Russia, or possibly the UK, or I should say the EU in general, of trying to make a play for creating some mining centers of any, you know, level of competency?
Well, I think the what's beautiful about the Bitcoin blockchain and Bitcoin mining is that if a government makes it harder to mine or tries to control it, the mining will just move somewhere else. We
Move
saw
away.
that with China. Imagine somebody who controls arguably 50% of the mining going on in the world shuts it down in every way possible. You can't buy power, you can't buy machines, you can't transact in crypto, you can't have a crypto account. They have gone to extreme measures to make sure that there is no capital flight via Bitcoin out of China. That was the
Hmm.
primary reason why they
Right.
locked it down. Um, they want to have full control of the currency. They want to have full visibility as to who has what assets. And the only way they can do that is with their own digital currency.
Yeah.
Um, I think it's a bigger question regarding Bitcoin on a global basis. The US dollar today is the reserve currency that the world uses. Oil is priced in the US dollar. And if the dollar goes up or dollar goes down, if the US government, essentially devalues the US currency by printing a lot of money, that impacts the oil industry. It impacts lots of industries. And I don't know if you caught the comment that Putin made at the recent oil producing nations meeting, but he clearly made a dig at the US dollar as the reserve currency and said that potentially
Right.
oil could be priced in cryptocurrencies.
Yep.
Um, if you look at threats to the US dollar as a reserve currency, the euro is actually the biggest threat because
Right.
the yuan and the renminbi can't be because of the currency controls in those countries, in China. But For example, the euro could be a valid threat. There are benefits to the U.S. To having the dollar as a reserve currency, but there are also substantial costs. And if a non-governmental currency, non totally independent currency, not controllable by any government, such as Bitcoin, were to become more often used for settlement of trade, which
Hmm.
is what a reserve currency primarily does, then it would be easier for the U.S. to not relinquish control of the reserve currency, but it would be less threatening than if a government-controlled currency like the euro or other currency were to become more significantly used in trade. So, if I were to kind of wave a magic wand, it would be that I would wish that the U.S. regulators and the especially Treasury and at the Fed would view positively the use of Bitcoin as a commodity, as a trade currency, if you would,
Right.
and allow it to continue to flourish such that essentially between the US dollar status and Bitcoin being independent, it would be very hard for any other currency to dominate. And I think that would be a ideal long-term scenario
Yeah,
for
that would
US.
be nirvana, I think, in the sense of where
Mhm.
Bitcoin really would be at a level where it would essentially almost secure a potential, whether it's through the dollar or not, a world reserve currency status into it,
Yep.
or value, I should say. So that would, interesting observation of how that might go with. Okay, so that would essentially kind of secure. Through whether it backing into it or strategically, the U.S. has secured obviously most of the world's global hash rate. How long do you think we can hold that number one position? Do you think this is kind of locked in now, or do you feel this is something that could be threatened at any point?
Well, I don't view it as something being threatened because the more distributed the global hash rate is, the better for Bitcoin from a security
Hmm.
perspective. Um, if the US government were to all of a sudden flip flop and decide they're going to prohibit Bitcoin mining, you would see miners would just move offshore.
Sure.
So I don't think there is value in the US being the leader in Bitcoin mining to the global Bitcoin community, other than the fact that it's a fairly safe regulatory environment and likely the US government's not going to do anything uh, that will negatively impact Bitcoin in that regard.
Yeah.
I think as we approach over 50%, then you start getting into people worrying about could the US government institute a 51% event effectively in Bitcoin. So I think the
Hmm.
ideal kind of share of the market is kind of where we are today. We're kind of
Yeah.
35% arguably. Maybe we hit 40%. But I think you're going to see, because of the availability of renewable energy outside the US, which hasn't been able to be tapped before because there are no consumers for it. You could go in the middle of the deserts in Chile, up in the mountains, and establish huge solar farms that would generate lots of cheap electricity for Bitcoin mining. The problem is there are no consumers for that power other than a Bitcoin miner.
Right.
But that would be enough for somebody in Chile to maybe want to build out that facility. And
Exactly.
so I think very quickly you're going to see Bitcoin mining will continue to, it's like water flowing downhill. It's looking for the lowest cost, best quality energy to use
Yeah, for sure.
constantly.
Yeah, for sure. Fred Thiel coming to us from Marathon. We appreciate your time today. Thanks for stopping in on the show.
Thanks a lot, Paul.
Excellent. All right, so you guys are tuned in over on the podcast right now. Thanks again for the kudos over there. But jump over here to the YouTube channel. This is the best place for interviews like this, but also some of the analysis that we do on many of the projects, crypto projects, Bitcoin, et cetera, out there. If you have an idea for a show and you want to reach out to us, hit us in the comments below, because that's our producers are constantly combing that, looking for and what you guys are looking to basically learn and educate yourselves on around the whole idea of blockchain and innovative technologies here on TechPath. If you want to reach me, hit me up on Twitter at Paul Barron. We'll catch you next time right here on TechPath.